Shigala from the Standard.io. Today we have Prat from Zoth, Zoth.io, talking. We're going to deep dive you and straight after the intro. And so welcome to the DeFi Dialogues, where we showcase all of the Chainlink build program partners, the Standard.io being one of them, and of course Zoth being another one. The wonderful thing about Chainlink build is that they have done their due diligence. They have invested in some of the best protocols out there with their time and their resources to bring these projects like the Standard.io, like Zoth.io, to the world, and to really help us with their technology and also help us reach a wider audience, because we're all technologists. We're not some of the best marketers in the world. And so being able to have partners like Chainlink will really help us reach new audiences. And so welcome, Prat, to the DeFi Dialogues.
Thanks, Josh. Great to meet you again. Thanks for having me on the build series.
Yeah, it's my absolute pleasure. Why don't you do a quick introduction into yourself and why you started Zoth? Oh, let's just start off with an introduction of yourself, and then we'll talk about Zoth.
Yeah, for sure. So I'm Pratyush. Been in the DeFi space for close to about 3 years on a personal capacity. Been a DeFi native trader, an airdrop farmer, a yield junkie, a complete on-chain freak, right, for the last 3 years. I started off my career about 4 years back in fintech, right? So I was working as an analyst at Open Financial, which is one of unicorn startups based out of India. So I was there for about 2 years, and during that journey, stumbled upon DeFi on a personal capacity, and I thought this was my calling, and try to pivot into it professionally as well, right? So it's been close to about 1.5 years now. Been 1 year with Zoth professionally, and prior to this was working with Polytrade, another RWA tokenization platform, right? At Zoth, I primarily look after anything related to strategy and DeFi. That's pretty much about myself.
All right. So we're going to, what I like to do is try to get to the bottom of why Chainlink was interested in your protocol. What do you guys do that's special? I'm going to bring up the website here because I think it's a great way to have a look at from a top down level. But while we scroll that, can you give me just an overview of what Zoth is?
Yeah, absolutely. So Zoth is essentially a DeFi RWA ecosystem, bringing fixed income products from the traditional finance world on chain, right? Tokenized, fractionalized, put onto DeFi rails and allowing for access just on stable coins, right? The first piece that we bought on chain is tokenized trade receivables. For people who are not familiar, this is an asset class which is been around for the last 40-50 years. Highly secure global trade finance product. Invoice factoring or trade finance receivable financing is basically the final leg of trade finance.
Hang on, let's stop there because I think a lot of people will be like, "Oh, you lost me. I don't know what that means." So I just want to break that down. So basically, what that means is that I have a company that I make a whole lot of. I've got a factory of a whole lot of things that I make, and I get a huge order in to do those things, to make those things. But the people aren't going to pay me until I've made the things, and so I go and get a
You
loan.
made things and you've dispatched them, and you have to wait a certain cyclic period.
Okay. So I've made the things. I'm already out of pocket because I've made the things,
Absolutely.
and I'm
Should-
waiting. And the retailer is, or the person, the company that's bought it is at the end of the month when the invoice is due, ready to pay. It's already invoiced. The capital is going to be flowing, and you're waiting. So you as a company take a loan out, and there's a whole lot of structure, and that's why it's called structured debt, because there's a whole lot of structure behind these sorts of loans everywhere, all around the world, and they're already there. Except within DeFi, you guys make it more efficient. Is that correct?
Yeah, absolutely, spot on, right? To a continuation to that, right? So you have a real world supplier. The focus that we have is more towards emerging markets, right? Because we look at the disparity in terms of borrowing capacity. When you look at apples to apples, your emerging market, real world SMEs don't really get the same kind of capital efficiency to borrow from traditional finance institutes as compared to a developed someone who's there in a developed market, right?
Mm.
A lot of inefficiencies there. So with this whole cross-border trade finance piece, this is one thing that we're trying to tackle, right? Provide this alternate source of liquidity or capital for these small to medium-sized businesses from these emerging market regions. And specifically, why trade finance? Rightly so, like you mentioned, it's structured debt. Meaning the supplier would have dispatched, manufactured, he would have spent all his money manufacturing these goods, finally shipping them to the importer. And in the process of doing so, the invoice is still going to be post dated, right? 30 days to start with, but it can also go all the way up to 180 days, right? So when you look at it from an SME point of view, it is highly efficient to operate this way if you're not a large scale, business, right? Because you don't have a lot of capital to churn. And that's the reason you have a lot of factoring companies such as yourselves come in, purchase these trade receivables on day one and provide the working capital required for the SME, and we go ahead and do the receivable collection on the due date of the invoice from the buyer or the importer of these products, right? The structure that we have currently, these importers are large scale corporates like Costa Coffee, AB InBev, which is Budweiser, world's largest beer company. We're working with companies like Zetwork, Udan, based out of India, who are multi-billion-dollar valued super unicorn marketplaces. So really, when you look at the way it is structured, right, your capital goes towards empowering a small to medium business, but the risk of repayment lies with the large scale corporate, right? So it's packaged as an efficient, business structured loan.
Fascinating, fascinating. How much, like, in terms of onboarding, how many people are currently using? Actually, let's take it back a bit. Let's break it down to what actually happens in the protocol. Do the users lend their stablecoins into the protocol? Is it decentralized? Are there smart contracts? Who has access to the funds? All of these things. How do the borrowers, how do the lenders protect themselves against default?
Yeah, absolutely. So, two sides of things, right? One is how we structured the actual, let's call it the invoice factoring or receivable financing piece, right? Which is still something that Zoth takes care of in the real world, right? How you structure and make sure that there are no delinquencies, that there are no defaults. I'll come to that part a little bit later, right? To address the first point that you mentioned, the platform works in a simple way. You can envision it as a marketplace, right? So we tokenize, we bring these real world trade finance receivables on chain, and we allow for access on stable coins, right? So you have any lender, or let's call them as liquidity providers, right, who are
Mm.
looking at these passive yield generating opportunities on chain. They're able to come onto the platform. It is still a permission product, meaning they would have to KYC, KYB. And the reason for that is we are dealing with real world assets, and we need to ultimately show source of funds when we are deploying to these real world borrowers. So they will have to finish that level of screening first, and once the KYC or KYB is approved, they will get they will be able to go to the platform, look at all the assets which are available. If they find a pool of their choice, there's an elaborative data room in place. The data room has all details with regards to the underlying asset, right? The trade receivables, the actual KYC of the borrower, the KYC of the corporate who's paying back the receivables, meaning the buyer of the product. We look at the last 3 years, 4 years of their trade history, meaning there's a supplier and there's a buyer, right? There's a minimum of 3 years of trade history between these two parties. The reason this is done is to make sure that there is no counterparty risk, or there's no falsified invoice that we are dealing with, right? So we look at strong business vintage and make a decisive decision to fund the invoice or not, right? So all this information, all this data is available for the user, on chain through the data room, and also through the NFT, which is data available in a hashed form, right? We are leveraging the blockchain tech for that. Now, coming to this entire piece is we wouldn't call it fully decentralized. We are heading towards that once our token is launched, and we create the entire DAO and the governance model out of it. But for now, it is a process which is done manually in the real world, but bought on chain and tokenized, right? Now, coming to the second point of your question, right, which is how do we avoid these defaults which happen, right? Just to start off with, the asset class that we're dealing with, trade finance receivables, has a global NPA rate of 1%, meaning they're a super high quality asset class to begin with, right? And
1% default rate across the class.
Yes.
Yeah, and that makes sense because basically you've got an invoice waiting. It's generally like a business is going to pay it. It's just a matter of it's just normal business practice to pay at the end of the month. You're not going to pay in real time as invoices come in.
Absolutely.
The accountant gets it, the accountant department, and goes through the invoices at the end of the month and pays everything. And it's that gap that you're solving.
Yeah, absolutely. And the kind of risk that we're taking on is we are essentially factoring receivables which are paid back by these large scale corporates, which I mentioned earlier, right? AB InBevs, Costa Coffees. So your risk of repayment really lies with these large scale corporate. How often is an AB InBev not going to pay back a small scale SME retailer's invoice, right? So that's really the bet that we bank on. And also when it comes to quality of borrowers, these are all the kind of repayments which I mentioned are all credit A plus kind of borrowers, right? Or rather buyers of the product who pay back the invoice. When we deal with medium to lower quality buyers, we take multiple ways of risk mitigation. First one being actual trade credit insurance, right? We are working with players like Cofas, Mercury, AIG, who've pretty much been in the trade finance insurance game for the last 20-30 years. So these insurance companies will essentially underwrite both the buyer and the supplier for you, and based on their credit history and the credit scores, they are able to give a certain percentage of insurance on the entire trade that you do, right?
Okay.
Usually between 80 to 90%. So in some cases we've insured our products, our trade receivables. In other cases, we have corporate guarantees, we have post-dated checks, mandates. In some cases, we work out of few distributors. We work with few distributors or third-party factoring agencies in jurisdictions that we don't really have too much of presence, right? For example, in LATAM, we are working with a well-renowned trade finance institution. Similarly, in MENA and Dubai region, right? So in such cases, we work with escrow accounts where we don't really rely too much on the counterparty and put most of the risk on them. We do an escrow account where we have a separate transfer agent and the custody lies with this third party agent. So there's multiple bits and pieces which are involved. That's pretty much all these moving parts together is sort of like the risk mitigation game that we play.
Yeah, fantastic. So where did you guys come from? Like, are you guys traditionally in this game and you thought you'd just bring it on chain, or how did that work?
For sure, right? So just to give you, I'm sorry, am I still there?
Yep.
There was
Yeah.
a little buffer. Yeah. So just to give you a little bit of context on how Zoth was actually started, right? My founders, Preetham, who's our founder and CEO, he was ex-global director leading fintech ventures at AB InBev, right? He was in that place for close to about 2 to 3 years, where he built a fintech business at AB InBev and scaled it from $0 to $300 million loan book, where they primarily deployed capital in Africa, right? Small to medium sized loans, microfinancing loans. So along with him, Kaushik, who's our co-founder and CTO, he was really looking after digital innovations and working with Gary Vee to launch the first Budweiser series NFTs back in 2021. So when both of them really met for this they called it as, beer garage or the innovation house at AB InBev, right?
Mm.
When both of them got together to kind of ideate on how blockchain technology and that whole transparency efficiency layer can be clubbed with actual, solving a real world problem, which is, tapping into these emerging markets and providing alternate sorts of capital for these real world businesses. That's when the idea of Zoth really started, right? And yeah, it's been close to about 1.5 year now, and we've been in that journey for so long.
Oh, that's amazing. So, what do you like see next for Zoth? You guys have tackled originally it was these loans for that have already been that are ready to be invoiced and paid back, so very short term loans. What's next for you guys?
Yeah, I think the immediate next, asset class that we're looking at is other forms of fixed income, right? Similar to these structured kind of opportunities. So one thing that's been interesting is we've been looking at some of the sovereign debt bonds from countries like Oman. So these are essentially, bonds that are, governed by the which are sovereign debt bonds, meaning the government are issuing these bonds for be it real estate development, any infrastructure development project. So the yield when it comes to these kind of exotic bonds is quite decent, right? It's much more higher than your traditional USD bills. We are seeing anywhere between 7 to 8%. So the immediate next step would be to bring these kind of sovereign or exotic bonds on chain,
Mm.
tokenize them, and offer it to our our user base.
Yeah.
We are also in parallel looking at pure simple plain vanilla T-bills, because there's always a market for that,
Of course.
especially the kind of interest rates that we're dealing with, right?
Yeah.
Yeah, but the idea is to bring these kind of more structured kind of deals on chain, at least for the next, I would say, till end of this year.
Oh, that sounds fascinating. And like, how do do you guys have your own token? How does that fit into the scenario?
Absolutely. So we're actually in the process of our own token launch, right? We are scheduled for late Q2, early Q3 of this year. We're really looking at, majority of last year was spent mostly on building the business side of things, making sure that our fundraise was in place. So we managed to really do well in both the parts. We're sitting at close to about 6 million in total trade receivables finance so far till date in the 5 months of operation that the product has been live for. And yeah, we managed to raise some funds, and we're glad to have people like Blockchain Founders Fund, Outlier Ventures, Momentum 6 VC, XVC Tech, and bunch of other VCs participate in our current seed round, which we're in the process of wrapping up, right? It really gives us enough conviction and move towards that global vision that we have,
Mm.
and the token really plays a very important role here. So the idea is to launch the token in, like I mentioned, late Q2 and early Q3. The primary reason for the token is, I kind of hinted it early on when we started the conversation, right? So the kind of as is process now that Zoth is working with is like a marketplace, right? We originate assets, we kind of bring in the lenders. Zoth still does most of the due diligence, and the lenders really, put the trust in us that we are, we do have the experience, but that's not really the decentralized way of doing it, right? And we really want to change that, and the token is going to allow us to do that. So the first and foremost thing would be to create this entire validator ecosystem for RWAs that we are bringing on chain. The way it would work is Zoth still does the due diligence, the sourcing, and the process of bringing the assets on chain, but we have a layer of real world or rather on chain, financial validators, right?
Mm.
Who have the capabilities to really vet these assets. These are all neutral third party validators.
Yeah.
It could be your global companies like your big four, right? EY, Deloitte, who do your financial audits for you. Could be representatives from here. So these financial institutions would be our validator, on-chain validator layer, and for them to operate in a decentralized way and make sure that there's no malicious intentions there, we
Yeah.
would need them to have a stake of Zoth tokens, right? And yeah, if there is a consensus achieved around making sure that these assets are verified and they're rightly audited, that layer is going to be sorted out. And the second utility is obviously for the entire governance and the DAO side of things, right? Token holders, or rather token stakers, would have a say in how the platform operates to a certain extent. What kind of assets that we are bringing next. If an index is not really performing that well, they will have the ability to collectively decide if that moves out of the ecosystem. So primarily these two utilities, but there's bunch of other utilities like platform fee incentives, liquidity incentives for LPs. But yeah, all of this is really built into the token, and we're super excited for the launch. Yeah.
Yeah, that's definitely exciting. So we've just hit 26,000. Sorry, 56, 60. What are we? See, it's moving all so fast. I'm gonna have to check. It's $62,000 for Bitcoin.
Oh,
And like, I just want to get a little bit from the away from Zoth for the moment. Where do you think right now, with this bull market and with the with a lot of new VC capital coming in, a lot more interest coming into the market, where do you think this is going? How long do you think this bull market's here for?
No, it's a very interesting question, right? It's something that I've been spending some time on to really understand. So this is the second bull market that I've been part of, right? So it's been close to about 3 years for me in the entire DeFi space. So there's a lot of difference when you look at what happened in the last bull cycle and what's happening now, right? Some similarities is the entire pre-halving rally. Before the halving, you tend to see a small correction, and then we're back up, and we break the all-time high and we go to new highs, right? I see a similar kind of pattern playing out, but the kind of push that we're getting now is really backed by that institutional capital which is coming in. Because of the Bitcoin ETF being approved, you see people like Fidelity, BlackRock taking huge positions in BTC, right? There's rumors or enough conviction that there's an ETH ETF going to happen as well. So if that happens, there's no really. It's really hard to predict, right? We were close to breaking the previous all-time high. I think it came to about 64, really consolidated. I strongly believe that we would hit the next support, which is at 69, and possibly go above that, maybe to 70. Maybe look for a small retracement before the halving, and who knows, maybe 100 120k. It could be the new all-time high. But considering also, it's important to keep in mind the global macro scale of how things are happening throughout the world, right? We recently got news that London has also now moved into a recession, right? US interest rates have been creeping up steadily for the last close to 2 years, ever since COVID and the entire crisis behind that. So there's no really, there's enough new money that's been printed by the Fed. There's not enough conviction for us to keep continuing the way that we are. So I still believe that all the evidence is hinting towards possible recession coming. But I believe that is going to happen right after the US elections, which is in September. So till then, things don't seem to be too shaky. And when we speak specifically of the bull rally that's happening in crypto, I think till September, maybe end of the year max, there's not going to be a lot of movement. But all of that can change if global recession is announced, and from there we never know, right, what kind of price movements that we're going to look at.
Yeah, it's a very interesting one, because Bitcoin fundamentally was built to be a hedge against all sorts of problems,
For sure.
and we just are seeing massive issues with AI coming out. I was just on a show just now with Adam Stokes, and we talked about how there was an investor building an $800 million Hollywood studio. And he's pulled the funding for that after seeing what OpenAI have produced in terms of their video generation software. And so what that means is that 800 million hasn't just disappeared. It's got to get redeployed somewhere else.
Yeah, for
And if
sure.
someone feels a bit like, I don't know where to put these funds. Well, what generally happens, it goes to safe haven assets. And traditionally, those assets are, well, forestry or house,
Right.
houses, gold, silver. And now Bitcoin is joining that class
Yep.
because it is fundamentally rare. So it'll be fascinating to see what happens with that, to see if the recession does cause a recession in Bitcoin as well, or does the capital move to fly to a more safe zone and wait for the jobs to come back and start posting uh, better things. Now, are we going to live in a post-job world come a lot of this AI stuff, or will it take 10 years for us to re-find where humanity fits in and how value starts being moved around again in these markets? Absolutely fascinating time that we're living in right now.
Sure.
Obviously, things like supply chains and stuff aren't going away. Obviously, receivables debt isn't going away. What you guys have built there is really fascinating. And so, yeah, I'm looking forward to what you guys are coming up with next. Just to give all the viewers an update on the standard, we just relaunched everything after a month and a half of going through a code audit and getting smashed by 250 plus white hat hackers and code auditors to try and break us. We've come through the other side absolutely clean, and we've found some really nice little ways to make the contracts more efficient. And yesterday we relaunched. We've got a brand new website. If you guys want to check it out, it's over at thestandard.io. I'll just quickly share my screen as well, just so that we can go through some of these things. So we've released these new yield accounts. So what you can do is you can borrow for 0% interest by creating a smart vault, and then once you've borrowed against yourself, against your assets, also you don't need to give up your private key. I'm having a bit of problem sharing my screen actually. It's gone all blank. I don't know. It's my first time trying to do that on Restream, so maybe I'll figure it out a bit later. But nevertheless, right now we have some amazing stuff going on with these yield accounts. Basically, whenever anybody is liquidated, when they've borrowed and they've borrowed too much and there's a price shift and the vault gets liquidated, all of the people in that yield account can buy up those assets at 10%, around about up to 10% under market value. So if Bitcoin's trading at 50K, you might be able to buy it 10% under that. If it's trading at 60K, it's always 10% under. And then you can arbitrage it out into the wider market. And by the way, you can also buy up any trading fees that happen on the network just like that as well. So if you want to borrow against your crypto without trusting a third party, you don't no need to trust BlockFi or Celsius or FTX or any of those nonsense players anymore. You can use just smart contracts. That's the whole vision of DeFi. Prat, is there anything else that you would like to tell the audience before we leave it?
No, I think that was a solid conversation, right? Maybe just to add in, I did mention a sweet, kind of Easter egg that we will be launching our token, coming Q2, late Q2, early Q3. There's a lot of incentives, planned out and laid out for the community. So make sure, you follow the Zoth socials and keep track of what's happening. Yeah, we're all in it for this bull ride. And yeah, wishing everyone a crazy massive run, right?
Yeah, fantastic. It's just so exciting. Where the halvening is very very close. It's I think it's in mid-April, so we're very close. And yeah, I mean, there's so many things that point in the way up, because BlackRock is buying 10,000 Bitcoin a day for their
Yep.
ETF. That's just one ETF. There's only 900 Bitcoin that get mined every day, and after the halving, it's 450. So it's a truly
Supply
scarce
shock.
asset. Yeah, very, very interesting times ahead. Prat, if people want to follow you, Prat, on socials, what's the best place?
Yeah, I think my Twitter would be the right place, right? That's at Pratyush Prasad, at PRATHYUSH, and Prasad, PRASID.
All right,
So that's
we'll link
DeFi.
those below. We'll link those below. Yeah, and the Zoth is Zoth.io.
Yes, Zod.io.
Hey, all the best protocols have a .io. I'm telling you, the standard.io, Zoth.io, it's the way to go. Folks, I'm wishing you and your family a wonderful, healthy, and wealthy and wise next week. We'll see you down the rabbit hole. Thanks for joining us. Bye bye.